Hi, and welcome to the Stock Scores Market Minutes for October 23rd, 2017. This week's topic, selling emotion. Then I'll do my regular weekly market analysis. And finally, the trade of the week on Myriad Genetics. All right, let's get into this topic, selling emotion. Investors will often act emotionally in the market. And because of greed, stocks can go up too quickly. And fear can cause stocks to go down too quickly. If you own a stock that is going up very fast and running away from its trend line, so if you can imagine you've got a trend and then it really goes like that, what you can see there is that there is greed acting in the market, that there is emotional buying, and in that situation, you want to use a more aggressive method to sell, a tighter trailing stop method, or looking for a break of a trend line on a very short-term intraday chart perhaps. And if a stock is falling very sharply and really panic selling as it falls away from its trend line, you might want to just wait a day or two, because sometimes that fear wears off and the stock that's going down very sharply will come back a little bit. So consider waiting for that fear to wear off before you exit the trade. All right, let's get into this week's analysis. And here's the S&P 500 ETF, SPY, 30-day, 60-minute chart. Let's just summarize where we've been over the last 30 trading days. We've got a line of resistance here that was broken. That started this upward trend. The upward trend line was broken there, and that put us into this kind of anemic upward trend as basically the buyers were tired and they took a break. We had a break of that on Thursday, and it looked like the market might start to sell off. However, it failed to close below that line by the end of the day, and it actually broke higher on Friday. So the bulls are still in control of the short-term chart of the S&P 500. Looking at the longer-term chart, you can see that the volatility is diminishing a lot. Look at how the swings have just been getting narrower and narrower until we're really into this narrow trading range. Now what we have is a long-term upward trend line that looks something like that. There's your upward sloping channel. So we're getting near the top of the channel there, where inevitably the sellers might get a little bit more motivated. We've got a medium-term bottom of the trend line like this, and that's what we want to watch for a break of. And then if it breaks that, it'll probably come back to this one. So for now, the buyers are in control. I think the market's a little overbought. That means it's susceptible to some selling pressure, but there's really no sign of any yet. So I remain bullish on this market, but with the idea that eventually it's going to run out of steam. Looking at the Russell 2000, this is now a daily chart going back 8 months. And we have had a nice run higher. The market ran away from the trend line. That's what we talked about at the top of this video. And it's pulled back to the trend line and it bounced, exactly what we would expect. So it bounced there on Thursday and we had a little break up Friday. Now, a little disappointing that the market failed to close above its open on Friday, but it is hitting this resistance zone right here, relatively short-term resistance. So I think it could stall here for a couple of days, but it does look like the small caps are likely to move higher after taking most of the month of October off. Onto the Canadian market, you can see we had a nice upward trend there, that upward trend broken, and then it still sort of trickled higher, but not with much enthusiasm. It's a bullish trend, sort of, because it's going up from left to right. We have rising bottoms. The issue is that the pace of the trend has slowed, and it makes some sense when you look at the longer term chart, because on that longer term chart, we have resistance right there at the old highs. And so I often say that markets that rally into resistance usually get stuck at resistance, and that's exactly what will likely happen in the next week or two. The buyers will lose their enthusiasm, the sellers will get a little more motivated, and you'll see the market kind of get stuck in that zone. Now, that's what will probably happen. It could continue right on through. That's what will probably not happen, but it could happen. And so we always want to think about these things in terms of probability. On the TSX venture market, we had that downward trend that was broken. We've been building rising bottoms since, kind of ran up a little quickly, pulled back, bounced. Looks to me like this will probably continue higher. It's got a fair amount of resistance to work through, but we are into stock trading season when the buyers are fairly enthusiastic for these smaller cap stocks running from October until May. And so I think it's a good time to be trading these stocks. Just realize that it's still gathering some momentum. It will take some time for that enthusiasm to really build. Now moving along to the 20-year bond ETF, TLT, which is represents the US bond market and really represents interest rates. If it's going down, that means interest rates are going up. And if it's going up, that means interest rates going down. Well, you can see that we've been sort of quietly moving higher, but not with a lot of enthusiasm, and we are at some risk of breaking this upward trend line. So if we get a breakdown through that, that will imply an expectation that maybe the Fed is going to raise interest rates, that interest rates in the bond market in the US are going to rise, and until we break to the upside, I would say that that's the case. So I'd be somewhat cautious with the bond market in the US. It does look like it wants to go lower, which means interest rates go higher. I don't think it's decisively so because we're in this kind of choppy pattern, but generally speaking, I'm somewhat bearish on the bond market. Moving along to the US dollar, there you have your downward trend line, which was broken. US dollar has been stabilizing over the last month, building rising bottoms, building what I call a bottom fishing pattern. Bottom fishing pattern goes like this. Downward trend, break the downward trend, that's step one. Build the rising bottom, that's step two. And the final step is a break up. That would be step three. We haven't got step three yet, but watch for that. If it can break up through on this ETF 2450 or so, then it's likely that the US dollar will rally higher. Gold doesn't do well if the US dollar is going up. It's generally been condensing or having compressing volatility. You can see we had an upward move, downward move, less intense, upward move, less intense, downward move, even less intense. And so the result is that we get this compression of volatility, which indicates that investors are gaining a greater confidence that the price of gold is whatever that is, $1,220 on gold on the ETF, around 121 or so. And so I'm not real enthusiastic about owning something when it's in a compressing volatility pattern. We want to look for breaks out of that pattern. So if gold can break to the upside out of the pattern, that is bullish. If it breaks downside out of the pattern, that is bearish. It is doing neither right now. So generally, I would say you got to be pretty fussy about the gold stocks that you trade. Onto the US oil market, you can see downward trend line broken about a month ago. We've been building rising bottoms. We're compressing volatility in this little bottom fishing pattern again. If we can break to the upside, that will mean oil headed lower. If we break the upward trend line to the downside, then that will mean that oil's probably going to try and retest the lows. This looks more likely to go higher than lower, but the upside is fairly limited up to there. So not tremendous upside, but some optimism building in oil. And fear, well, there is just no fear. In fact, you would call this complacency. The market is really just in an upward trend. No one worried about a correction. That's a dangerous situation. If the trend were to be broken, you could get some real panic selling out of that, but there's no sign that the trend is breaking. So I don't want you to be worried yet, but I definitely want you to think about the fact that eventually fear will come back to the market. So my outlook then, US stocks, bullish on both time frames. Canadian stocks, neutral on both time frames, although the trends are up simply because it's hitting that resistance. And so I think short term it's going to stall. Gold, neutral long-term, bearish short-term. Oil, neutral on both time frames. The bulls remain in control of the market, but they are emotionless and uneager to act decisively. The market drifts higher on light volume with low volatility. It's relatively stable for that buy and hold investor until trends are broken. However, not a lot of great trading opportunities. You really have to focus on alpha, those stocks trading abnormally. Gold is range bound and oil is slowly showing compressing volatility, and that is a sign that it's on the verge of a break in one way or another. Fear is very low. All right, for this week's Trade of the Week, I wanted to showcase a position trade. This is one that was featured in my Trade Scores alerts, available at tradescores.com. Usually I feature day trades and swing trades. I wanted to show a longer term trade. This was the day that it was featured in the newsletter. And there was the abnormal volume, abnormal price action, breaking out of a period of low price volatility. And that started this very nice upward trend. I opted to take the exit here when the trend line was broken because I do think that it's got some distance to fall until it gets to that long-term support of the upward trend line. So it's a situation where the stock's up over 50% in 4 months. Take the money off the table, move on. That's a nice little position trade in this NASDAQ listed stock. Well, that has been the Stock Scores Market Minutes. Hope that you've enjoyed it. Please like the video if you like it, subscribe to the channel, and as always, trade well.